Yo, 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 yo. Oh, that was brutal. Okay, so this mic doesn't even work. Yo, what? Works for... Yo, does it work now? Yo, what in the world? Oh, it does. I was looking at someone else. I thought it was working. What up, guys? Oh, I got the... Here we go. Alright. Let's get this started. So I got all the pre-market stuff set up. Let's make sure everything's working. Let's make sure everything's working. Alright, it is. But it's like quiet. You could like... I'll turn it up. Oh shoot, this might be a bit too loud. Alright, it is. But it's like quiet. You could like... I'll turn it up. Oh shoot, this might be a bit too loud. Oh no, this is good. This is good. Now what's the vertical look like? Now what's the vertical look like? Alright. Okay, vertical is good for music and mic. Okay, vertical is same for OBS. All right. I had to watch what someone put on because might get copyrighted. Alright. So, what's going on? Right now, we are... Yesterday, this is all stuff that's been marked. Like I did before I turned on the stream. Kind of. Looks... But I didn't see the lines yesterday, but I don't think it did much, actually. It's crazy how this one shut up. Well, this had to be news related because that stuff was diabolical. There's no way it just happened. What does the candle look like for this? I already marked the yesterday high and low, so that's good. Yeah, look at this. Oh. Buy at the low and hold. All right. Okay. Let's see if we have Anything major? All right. 8:30. Pre. This is factory orders. 10:30. Atlanta. Nah, we're good. There's nothing. Compared to like yesterday, there was like 3 and only 1 shot up. Because like, yeah, it was like the market was in like down, and it was like the shoot up, and then it started like coming down and then up. Compared to like the other ones where it's just like, you know, the same thing. And like that's it. Like this is it. Like the other 2 was like nothing. It's pretty like boring. For the news thingies, except that one, because I thought it was gonna be some pretty huge moves, because especially 3 stars. But the only one that actually did move it was like that FOMC, or where I think, I don't know why, but the market is just shooting, trying to fill this gap. Already did. Are we at all time? I don't think we're at all time. No, we're not. We are far from all time. We still need around 26, 25, around 900 points. So if we can move 900 points today to the bull side, that would be amazing. Yeah, they're like both moving. Bro, I still got a while till the market opens. Shoot. And I'm out of water. Yesterday low. So we have, I wonder, could this be, this is moved. Looks like still Nvidia is still like a sort of downtrend. They're still going down. Might try to go here next. Oh my word, this or end here. It's like so many spots. Could say here. Could mark like every little support. Like that. And they just come down. These are crazy gaps. Oh wait, maybe I might actually just try to fill this. Hold up. Maybe it's this to try to fill. Just down to here. Because it looks like whenever Nvidia opens or NQ markets open or futures open, it opens at the same time. See, like 9:30 shoots. It's like gaps. I remember when NQ would do that a lot. NQ would do that. I'll be always so confused. But it looks like it hasn't in a while. Is it delayed? Pre-market Nasdaq Y, yada 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 yada. Yesterday the lows here. DD band. This DD band is updated. I couldn't see the DD bands for ES. Running out this here. I don't know if it'll be another one. Liquid map blue, though. Let's just hope not. Maybe it's something different. Maybe it's like actually. Blue wouldn't be bad. I think. I don't think blue would be bad. I don't even think I have. I wanted to see what other ones would be actually good. No, hold up. I get to my downloads. No. HP zone combination. I think it's just his bull zone. Yeah, it is. That'd be something good. I got a bunch of stuff to delete. I still have like stuff from editing. I have to delete. Oh, I'll see if I can find it in the Discord. Because I am not finding it in my folders or files. Announcements. Oh. Alright. Cheat sheets. Here you go. Liquidity maps. Save this to download so I can find it. Alright, what I wanted to happen. Usually we get blue. Alright, this is like the one where you like... Wait, can I like... Oh, nice. Alright, this is the one we usually get right here. This one, where it's usually just a blue bounce to open. Which is aight, and I also want you long on the open too. Next to resistance, but I like usually want like this one's aight. But this is like the most common one I feel like compared to like all of them. Though this would be nice. We open above MHP. Which technically we do, but it's like not marked. We're at a spot where like we're so high up, like the market shooting is so high up. I found this out. If the market's like shooting super up, the monthlies like stay down below. Like you'll see it on Rocket Scooter once like the liquidity maps and stuff loaded, but like they're all the way down at the bottom. Like you'll never be able to use them unless the market just like shoots down like 200 points. It's also like kind of like for bull and bear, like either it's in like either the bull this is like bull and bear, and like the market's just like here, and it's like super far down, or it's actually supposed to be like here, so the market doesn't like. Unless you have like really high moves, yeah, sure, bounce, shoot, or it could be the opposite way. But yeah, BLD or BLU is like the most common. LP would be nice too, like Bears on the Bull. This one is basically the same thing. Actually, it literally is like the same thing. Hold up. Oh, this is the same thing, but this is in a bear zone, and this is in a bull zone. So the light gray are bear, the dark gray are bull. This one is if we open. This one, I've not seen at all. Actually, this is what. Okay, so open if the market comes up to here, consolidates, shoot, take a trade there. And if the market falls, you're cooked. I think this might be DD banned, so maybe take that to open. But I've never seen that. BSU, open above MHP. You wait till the market comes down for it, and then buy. Wait to MHP. Actually, no, wait to open. Actually, and then if the market still comes up and it consolidates around HP, go to DD band. And if we open below MHP, wait for DD band bounce, and either you can leave some runners, takes profit at open, leave runners, and shoot up to half gap or MHP. Usually you'd short to go to half gap because that's where it wants you to go. This one is this was Chris's song for a second. Like, cool in the world. Like, it is a time of year, but anyways, this one's a shorty one. This one's also kind of a shorty one, more shorting. So if we open, and if DD res is below 0.5, it wants you to short off that right down to half gap. And if res is positive, you could take that trade at MHP actually. This one, if we open below MHP, wants you to go up to MHP. MHP is below. MHP res is below 0, I think. Yeah, I'm below 0. Take a short down to HP, and then you could, if res changes during that, you could take one to HP. Guys. But yeah, this one, yeah, short. This one, if we come open, this is BRSU. I actually didn't tell you guys what this is. BR bear, short down. This is basically like a literal shorting one. Open below MHP, short that to open, and if we consolidate on MHP, short it all the way to DD band, and you can take a short to DD band too. Also, this one, if we open above, take a long to HP, and that's it. If res is positive. This one also is bear, short, down. Oh, this is bear short up, bear short down. This one is if we, okay, no trades at the open. Usually there's trades at the open, but on this one, you wait till HP, and wait till it consolidates, and then it shoots down to DD band. Take a trade there, or HP. Consolidates around the HP open. You could take one to HP, and then if res switches during that, what? If res switches during that, you could take one to HP back. This is nice. They all have their own thing, but usually what we're getting right now is because we're in such a bull market all of a sudden. Because, like, you can see, like, Like, look at this. The market tried to sell. Alright? Like, the market was selling, and then we're shooting up. We're trying to fill in this gap here. And since there's so much bullish, I can't check liquidity maps, but I know we're in a bull zone. We have to be. Like, all this is like gotta make us into a bull. Because if blue shows up, you know, blue is the background is dark gray, which is bull zone. So you know it's gonna be we have to be in a bull. See, bull, long, up. This one is literally just a longed up. This is what we got yesterday when I was signed so hard. Yeah, we are. There's a gap. What in the world? Can't tell my mic broke. I have my headset broke. So I missed the market opens. Oh, there we go. I can see the DD bands. This is super far up, so that's not gonna happen. I don't think. This song I hear is something like I'd hear in Disney. Like Tomorrowland or something. On the speakers. Looks like we are coming down to yesterday high, so could you take a trade off yesterday high? Right here. Usually people do, but market is about to open. There might be some little like little resistance, as you can see right now. See resistance there? This is actually a really good trade to take. I think. I haven't traded in a while. Now since I think we shot up, now when the market opens, I think it's just gonna come. You know, usually like when the market opens, usually like comes down a bit and then it comes up and then it starts going up. But now since we're like super high up in this move, it's gonna want to like just shoot down and fill this gap, and then possibly, let's hope there's like something here. We can take a trade off, and it would just like shoot up to QQ open or something. Actually, QQ open is gonna be all the way up here, which is fine. Usually, the QQ close I think is above. I'm gonna pre-fire this. Usually it's like when the candles open, but I'll kind of see what happens when this candle closes. Usually it's like right here on the candle, like on the candle, not the wick, but on the candle. Yeah, there's just some resistance I think from yesterday's high. I think the buyers try to push up, but I still think it's in a downtrend. There's a lot of bullish now. It's turning bearish. just shoot down and fill us out, and then possibly let's hope there's like something here. I'm just checking in case like all of a sudden the mic goes out, because the one time it did, and I was like talking to myself for an hour 30 minutes, and it was like a waste of a stream. Just shoot down and fill us out, and then yeah, okay, everything's good. But you guys can like hear my keyboard and mouse. Oh well. Alright, so it looks like we're actually gonna come down to yesterday's high. Let's see if it actually does anything. Looks like they're already getting some resistance, the bears. I mean support. Looks like every time it comes closer to the yesterday high, it tries shooting up. Now this would be a decent trade to take, but because we're so close to the open, it's like how much did that shoot up? Julu! Kitty. Alright, never mind. Pre-firing this. Oh wait, it keeps moving. Man alive. Whole. Almost move 40 points. My word, very strong bull candle. Yo. It's like a 30. 95. Like almost 30. Alright, yeah. That would have been a quick scalp. Nice quick scalp take. Okay, 930. Oh! Holy, oh my word. Oh. I was off by 2 points. So like that, basically. My word, that was a crazy opening candle. Alright, let's get this half gap set up real quick. Not like we will use it. I don't think today. .75, nice. Alright, so it's on the yesterday high too, so right around here. Guessing 6876. 76.25. Alright, there. Man, we are shooting down. Whew. Yeah, SPY close is more actually close. Actually, no, SPY close is more far. Is this actually correct? 6862. Yeah, it is. Whew. That's far. Alright, let's get the half gap set up. Nothing major going on right now. Just a bounce off the QQ close. I wonder if that's actually a trade. Probably missed out then. 6869.25. I can quickly QQ close bounce. Liquidity map is blue. It's blue. Res is positive. We are very far from HP. Whew. 200 points away from HP. My word. Yeah, I'm looking at match stream. Like, look at this. Hold up. Oh, look, everything is down here. Everything is down here, man. Like, everything. Bull, HP, bear, DD band. Literally everything is there. That's something I want actually to take. If we can get that, that'd be nice. So I'm gonna quickly start setting up these lines because I know I'm not gonna be taking any trades here. I'm not going to draw down 200 points. Is it? Okay, lower MHP. Or whatever. Alright, bull zone 2. 469.25. Bull zone here. I could draw a rectangle. Rectangle. Change the color to a dark gray. Put this straight on bull. This will make it more easier to understand. Put that to DD band right now. Right now we're in a bull zone. So bear zone? Hold on, I actually need to see 2, 5, 4 to 8.10. I'll probably round up to just 1. Yeah. So I could actually do is I can get a rectangle here. Change this to a brighter color, like a white. And boom, we have our own homemade rocket scooter for now. It's like some Christmas lo-fi thingy. Alright, let's see here. So we are sinking. Res is negative right now, so this is not really looking too good. We are coming down fast. We are shooting down really fast. My wordy word. If you were to take a QQ close open, QQ close trade, it is part of the liquidity map, but like, yikes. You might have to play this slow. Let's just hope Res can switch, because right now it's negative 50. DD Res, cannot see right now. He has his like thing too low. Alright, so we're about to hit lower MHP. Res is still negative, but res is positive. Oh, we have a high pivot. I did not see that. Alright, I did not see this. So this is definitely gonna, like, it's definitely gonna, you're definitely gonna see some bull movement, especially when you hit this line. It didn't even really hit that line, but still. Yeah, this is usually expected for a yellow line. So all this stuff is here. All this stuff is here. You could scale this like crazy. You could scale all this. So if the market comes down here, you can buy one here. If it fails, buy here. And if it fails that, buy here. Because eventually it's eventually gonna go. So that's what I would do. Oh, wait a second. I'm looking at match stream right there. I just realized something. You could take a trade here. Because we have this yellow line here. That's basically your take profit. So if the market falls, buy, take profit. Because that yellow line is going to be such a huge resistance to break through. Because usually when you have like stuff like this, you really want to take it to like QQ close. But because that stupid yellow line's here, you can't really. You could hold it, but there's going to be major resistance like yesterday. As you saw, like, there was so much, it was like, test, fail, test, fail, test, fail, test, fail, shoot. I don't know why my lines are like that. It's like auto, like. But yeah, because this yellow line, this happened. So look at this, how crazy this yellow line is. Like, even with res negative, everything negative, it still like shoots up a bit. Like, this is crazy. When Matt automates this line, it makes you like you tradable because. Wait. Why can't you do it now? Like, isn't it like super easy to understand? Like, if it comes down like this, bounce for bowls. If it's below, bounce for bears. But where do you put that? What do you even call it? P line? Because it's yellow? I don't know. Alright, everything's looking good. ES, you know, bored as usual. ES usually is like in the middle of nowhere most of the times compared to NQ. Usually like 70% of the times like I take NQ more than ES. Because usually half the time like ES is like in the middle of nowhere most of the time compared to NQ. And also ES has like slower moves compared to also NQ. But it does cost, you do make more on NQ than ES than NQ. Because it's like $50 per tick, I'm pretty sure. Actually, I can't tell actually. How much is it per tick? Okay, so it's 62. So NQ is 50,000 per tick, and ES is 62,000. So 12,000 difference. $12,000 difference. If only this yellow line wasn't here, we probably all would have made like $200, like right now, like right then. And we were sort of gonna want to bid out for the day, done for the day. But no, we had this yellow line here. I really want to trade this yellow line. I haven't seen much like shorting off it though, because usually when you like when it gets shorted, like when we open and it sinks in and we hit, it's not like big drastic selling, because eventually it just gets filled and eventually it's just gonna break. So still not much major. Looks like it's slowing down here around here though. Usually what happens when there's a big move, it usually comes up and it starts slowing down. But the main goal for bulls is just gonna try to fill this little gap here. And then once it fills a gap, like the next trade could probably only be like, if you want to take a trade, yesterday high in QQQ open, duty band. I'm checking res right now. Let's see. Res is still negative 50 though. Alright, let's let the market come down now. Usually, like, this looks like that, one day. Kind of like we were above like DD band, and it was like a reversal sign, like for some reason. Though this is like not like, do not listen to what I'm saying, like. But it looks like it is slowing down though. We can definitely see slower movement, slow. It's not like more drastic moves like what the open was, because usually the first 5 minutes of the open, 1, 2, 3, 4, 5, these 5 handles were super fast because it was the first 5 minutes. The first 5 minutes are mostly the 1, 2, 3, 4, 5. These are the most. The first 5 minutes of the open is like one of the most volatile moments of the day. Yeah, but it looks like we're coming down. But remember, once we come down to here again, there's gonna be a lot of support. This is gonna be support, and then this is gonna be support. So there's a lot of stuff it's gonna break through. It has to break through. Now, if you want to do ES and res switches, the lower MHP is spy close. But looks like if we do come down to there, it'll probably stop around here. Stop around here because of this yellow line, and it'll reverse again. Unless it breaks. Negative 60 res. GD res is positive though, 0.91. So MHP does work. Bull zone does work. Bear zone works. And DD works. So everything looking good. We also have another 25304. It's like some. Oh, I'm wrong. Guessing here. There we go. All right, so we have like everything down here. Let's just hope we can like the market comes down like yesterday, super hard, and then we just bring it up. Maybe it is trying to go for that filling of the gap. All right, so to safely enter this, I'm looking at res right now. MHP is positive. MHP res positive. HP is negative 60, so that's gonna shoot right through. To take an actually good trade on HP, res has to be above 0, and HP res has to be above 0 for it to be like an A+. Because all this stuff is negative, this is probably like a B. It's probably gonna be like a B-. Maybe even a Z. New one unlocked. The Z minus. Looks like ES is coming down harder than NQ though. Alright, yeah, we are coming down. But ES is just tanking more. ES res is actually lower than NQ. I mean, higher than NQ. Actually. It's like negative 11 right now compared to NQ is negative 40. So there's a lot more movement for some reason though in ES though. Like more selling. But yeah, it's just it's gonna be like one of these like where it's just gonna be like slow. And everything's like negative except HP, MHP. Alright, I'll be back. I'll get you some water. I'll let you guys watch the stream. I mean, watch the stocks or NQ futures. This could take another hour of just waiting before it actually like shoots. Because I feel like it might just like, because look how slow everything's moving. There's like something here. I feel like there's something here. Now maybe it could be like support levels off this yellow line. Like there's so many like support levels off it. Like there's people are just like buy. Or I don't think people, it's something I think it's like something in Wall Street. So like people are going to try to scale this all the way down. This looks like pre-market candles. See, like, well, actually, they did a bit bigger, kind of. Hold up. I'm gonna see if I can like. We need the market to do this. We need the market to start just shooting up. We need to shoot up so we can get a cup and handle. I've only used the cup and handle once, and it actually worked out really well for me. I just casually was like, wait a hot second. Isn't this a cup and handle? It's just basically like you find something where it looks like a circle, a bottom circle, and you hope it's like a mix of handle, and then, well, doesn't hope, you just like have to like see, like, wait a hot second. I think you could take a trade off this. Because what this actually, I'm just starting to realize what this is. So like, when you make a cup and handle, you can see, okay, so the market's been here already. The market's been here. The market has been here. Let's say that. Let's say that. The market's been here. Actually, let's just say that. So you have this line here now. All right, and if we break, and actually we don't, because you usually have to have like this. So the market's gonna come like up, resistance, and now it's gonna start coming in downtrend. Now if it breaks this, all right, so it breaks this. It's nice, 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 and it shoots up above this, comes down. Support here, and support here. It's gonna go up. So that's why it's actually pretty good to take this stuff, actually. Just look out for it. I don't think you can use this as a trading strategy because I don't think it happens every time. I don't think it really happens every time. I think it's pretty rare for it to form. Like, maybe you could say it's here. Like, cup, handle, break, didn't work, break, like you have to be like so good at like seeing. I feel like you have to have like a lot of experience doing it. I want to mark like all the orbs and see if, like, could you have taken one? I feel like here. Wait. 1, 2. I gotta be fancy and use an and like this. Why does it look like that? Nah, screw that. Boom. Literally, this is how like slow it went. It like this is like the very fast volatility, and then it just slows down. But it looks like we are creating lower lows. You could just, if you just look at it hard enough, you can definitely see it. These are diabolical wicks, but like, Now, when the market slowly comes down here, like you can see, like uh, green, fill, green, fill. We'll actually make it lower. Green, fill, lower. Green, fill, lower. Green, fill. Green, fill, lower. So yeah, we are getting lower. We are picking up speed though. But right here, there's gonna be support. I know it. There's gonna be some like little bounce. Like you see a little bounce here, and it might just actually shoot down. But you can see there's a little tap, little taps. I don't think it's gonna like shoot up the market. You know, see, look at that. That's very hard selling. All right, it did hit yellow line. But it's not the same. The market's reaching lower on the yellow line compared to this. From what I can see from here, the Bears definitely gonna break this yellow line. You can just see compared to this that it's gonna eventually close below yo. Might take a while because you can see like wick, possibly another, but eventually just. In what way do you use this strategy or indicator? You like just like what does this mean? I don't know. Head and shoulders? Left shoulder? Head? Yo. Guys, this is resistance. Wait, what? Yo. $161 points. Sheesh. 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 Now, would you trade these like everything as resistance and resistance and resistance? And like, all right, resistance, 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 resistance. And buy. Man, this is slow. Come on, market, just give me my money. Hurry up. Am I taking a long? I'm taking a long when it gets to here. When the market comes down to here, I'm taking a long, right to this yellow line. But no, I'm not in a trade right now. I'm waiting. I've been waiting. This yellow line is like crazy support. So at any time the market comes down to here, we had it here and here, the market just shoots up. I'm just waiting for this to slowly come down, and right there. But you could take this MHP here also, just like to like yellow line, because there's so much now. If we break into yellow, it will switch sides and now be resistance. But mostly what the trades I want to take is all down here. But this might be the stopping point possibly for bears. It's been slow. You see it's slowing down, but we were creating lower highs, higher lows. But yeah, we're on a 15-minute orb. We are right now in like we're in every orb. I've marked every like basic orb. I haven't done the 15-minute, but it hasn't. It's only like breaking, but it hasn't like closed. So it's stuck. Yeah, it's gonna be stuck here, resistance here, and it's gonna be stuck here, support here. So it has to have like very strong bear or bull moves to break this. But the ES was a good trade to take, possibly. It's stuck right now. It's stuck. It's stuck in like a middle area of also support and resistance here. So it usually just goes up 56, and it's usually just back and forth. As you can see from the wicks. But there, you can see, like, look at this big selling candle compared to these little ones. So I'm like hoping the market breaks this yellow line and then it reverses from here. I don't think it will reverse much though. I think like if it drops to here, it would reverse to here, this yellow line, and then it would like just chop around here and possibly break or just get lower. But at least you get like a trade in. Oops, actually I just opened COD. Looks like it might come down for another MHP bounce, possibly. But there's like so much resistance. I mean, support. Let's see. 1, 2, 3, 4, 5, 6, 7, around 8 wicks. So that's gonna be support. This is confusing. This is gonna be. I feel like a day where it might take all day just to fill this, and that's like it. Oh my word, market, just come down, please. Please, just a bit. Just a bit. Just drop around 100 points, please. Drop like 100 points. All right, come on. This is the third 1, 2, 3. This is like the third attempt that we actually gotten close. Maybe this is it. Let's see. Yeah, did it finish? Oh, it did. All right, never mind. It's not gonna come down, is it? I don't think so either. At this point, I'm starting to think like we could just have a day. This could be a day where it just like sits in a one spot here. But I feel like the Bulls would want to bring it up. I feel like I'd want to bring it up to here and fill this gap from the selling, but there's so much resistance. There's so much resistance going up to the upside, and so much support going to the downside. It's gonna be stuck for this like a while. I don't think there's gonna be any news that can actually like bring it down. Unless Trump says something like now, but I don't think. No, I cannot check here. Hold up. What is it called? Financial juice. Oh yeah, financial juice. What? I don't want this. Financial juice. There we go. This isn't gonna say much. There's like, all right. Somebody was at 10 o'clock. What's the 10 o'clock candle look like? 10 o'clock candle. So nothing. So there's gonna be, I don't think, much news. Yeah, but here we go. We did hit a third. We did hit a third attempt as a bear. You did get a third attempt, and it looks like it failed again. But I feel like if once we create these higher lows, I feel like there's gonna be more resistant points. Maybe. Like you could take like every wick and say it's resistant point for the bulls, but just gonna mark like every candle just coming down, and let's just see how much it can. Okay, here's another one. Wait, we have to wait till this one actually closes. Actually, no, there's one right there. Alright, here we go again. Very strong bear. Oh, never mind. Very strong bull support now. Oh, there's the bounce. This is the fourth attempt. We'll take those candle closes in 20 seconds. And then we'll use the next candle. So we'll just keep going lower and lower and lower and lower. It's gonna. I think it's gonna switch to a. Okay, here we go. Fifth attempt. I can't put it there. Actually, I have to wait till it closes. Oh no. More bullish. I don't even want to be a bear. I just want this market to come down a bit, so I can switch to a bull. Shoot, it broke. We gotta move it. Is the res still negative though? Yeah, res is still negative, and DD res is like not changed. Yo, bro. All right, man. All right, bro. All right. I wonder if you can scalp this stuff. Because every time it hits, scale. I think this is also support from MHP, also for ES. Let's see how far we can get before it starts reversing. I'm just gonna like mark every. Oh wait. Oh wait. This is kind of like what I'm kind of seeing is like this. I feel like over here from yesterday, we were chopping around here for so long. Like, look at this. Like, look at this chopping here. It's like the same thing over and over again. Up, down, up, down, up, down, up, 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 down, 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 down. So maybe it's just gonna take a while. Maybe it'll just take a while for this stuff to happen. Maybe we just gotta wait for something like this. We just gotta wait. It's because yesterday it did eventually fill the gap. It did eventually fill this. So maybe it's just gonna. You can already kind of see. Do I have a Discord? No, not yet. I'm not gonna set one up for like a while because I really don't know what I would put in it. It'd be a chat, but I feel like it'd be pretty dead. I don't have enough. I think I don't have enough subscribers yet. So maybe once I get like 1,000, yeah, or maybe even like less, I'll do Discord. Yeah, this is just chopping around. What's the video look like? Yeah, okay, so this isn't accurate, I don't think. This MHP bounce is not accurate. This was yesterday's. I could probably just like move and get rid of it. Wait, what? I'm surprised NVIDIA has not tried to fill this. So much like. What's the hourly look like? Oh shoot. What about personal friend me? Like what, on Discord? Yeah, I actually think that this might. This is gonna rotate. This might be it. This might start rotating now. I don't know, man. This is kind of confusing to how it's really going on. Res is still negative, though. Res has been negative, like, all morning. So negative. Oh, no, this might be it. Let's... I think we might be rotating. Now, if it was bull, the resistance would be the spot close right here. 1, 2, 3, and then 4. Actually, more here, so it's gonna be resistance here. Next. Yo, Rocky, you still there? What's your Discord? Oh my word, it's actually selling off. Holy cow, wait, hold up. Get ready. Yo, can we close, maybe? Although MHP might be support here. Rocket 9880. Alright. Add. It didn't work. Double check the username is correct. It doesn't work. It's not working. It's not it. I just did it. It doesn't work. I literally just did like the add friend and then just did rocket 9880. I just copied it. With Discord username. Is that your Discord username? Is there like any symbols or something? Oh, I sent one. Alright, I just had to type it out. I just had to type it out. 9880 was sent. I have scoliosis. Alright, there you are. I see you. Oh. Alright. There we go. Cool. Oh, there's the MHP support. Yeah, that's gonna happen. That was gonna happen. Watch that shoot up. 522. That'd been a nice scalp. 40 points take. Alright. Okay, so, man. So it did break the yellow line, but, like, it broke, but the MHP support, that was literally it. That would have been a nice scalp to actually trade. But I really want to hit hard like here. Like I'd probably take. I feel like I like 2 here. Maybe 1. No, actually 2. That's bad too. 2, 3. 3 cons and then maybe 5 contracts. My word, that'd be. I actually see how much. I need to ask Rock because I don't think I can just look it up. How much would like 5 and that's half of that's half of a mini. How much is dollar per tick for 5 MNQ contracts? Dollar per tick. No, that doesn't make sense, does it? No shot. It's only $2.50 per tick. What? I'm gonna just do like a say I long at 25 428 with 5 MNQ contracts, and the market went to 25,542.50. How much did I make? Holy. $1,445. Okay, what if it by here? What if it drops? What if the market drops 40 points on the I need to calculate this. Actually, not 40. It'd be all right. I'd be down 400, so I'd be down 200. It'd be a $200 trade. So what about 20 points? It'd be 200. All right, so 200 to 1,000. I'd probably take that. Hold up, I actually might need to do is, I think I might do is 2 and then 2 again on DD band. So let me ask Grok again, hold up. What if I want... Hold on, I'm just gonna copy and paste, I'm not gonna write this out again. Alright. What? I feel like it would probably be like $230 something. $240 for 6 contracts. So this would have to work pretty good. But I don't think that's gonna happen anymore. I don't think it's gonna happen. SS1. Oh yeah, so this is nice. I think this is actually now, it's starting to reverse now. Shucks. I want to react like a video. I really don't even know what to like watch, so. I forgot about it. Probably just stop in like 20 minutes, anyways. I feel like I'd probably stop and then like while I'm like doing school or stuff, just like watch. Maybe I should make like a separate channel where like maybe I make like a separate channel where I just make like reaction videos like Joe Bart does. Like Joe Bart has like 3 channels. Like one is his main, and then his react, and like gaming, and then like no 4, and then psychology. I just gotta find like something to like actually react to. Hold up. You watch FVG? What's FVG? Hold up. FVG. FGV? Or something when I type in FVG, it's like only like there's nothing called FVG. Fair Valley Gap. Fair Valley Gap. No, I don't look for Fair Valley Gap. Wait. Fair Valley Gap. Yeah, I've always wondered if this actually stuff even worked. Because I think TJR is known for this. Yeah, I looked this up. I always was so confused. You usually do is like you mark like you do like let's see right here. Get a rectangle and you like plop it here. This isn't a really big candle, but put on the wick, and you put it right here, and now there's supposed to be like some. Then you buy here. Something like that. For value gap, act as support, resistance, yeah, like this. You can do it for like these big candles too. You could have used this. Take a short. A short did work. Could use this candle. Like that. This one didn't do anything. I don't know how far you can actually like extend it. Usually you do like the first candles. It's wick to wick with space between. So I'm looking from the image here is like 3 bar, yeah. So this. So you have to find something that's 3 bar. So like maybe here actually, hold up. This 3 bar. Kind of. Bar 1 and bar 2. Check your Discord. I get notifications, hold up. They want to fill us FVG. Okay. So it's like the second image here's the choreograph. So the second image is like a longing position. That's what it looks like. I'll quickly grab. Yeah, okay. Is this like, Fair Value Gap some like kind of like technical? Is this like, do you trade technical? Like maybe ICT? Because ICT is like technical. Oh. Second image is confirmation. Okay. So this image makes sense. This image, oh, this makes sense. So like you have to find like a gapping where it doesn't go inside the gap, and then this, once the market sinks in, you buy here and then go. I don't know, I've never done ICT. I've only just stick to this. This is like super simple and super profitable. Actually, you're supposed to use a Rocksquare platform, but you have to get like live data and you have to pay for that. And right now you have to put like more money in, so I actually ran out. So I had to switch to this for now. But it's still the same basically, just like less stuff. So I have to like listen to like match tree most of the time for res and D-res and all that. Yeah, I've always wanted to like see like what ICT stuff you can do. Maybe I should look more into the Fair Value Gap. Cause like, hold up, let's see if I can. You need to find something that doesn't mother bar. Okay. So seeing 2 moves now. I see like three big candles. Yeah. One. No, this one's actually in, so I can't do that one. No, this isn't it. Can't do that one, can't do that one. So So it must be. How profitable is works better on the 5-minute and 15-minute? Oh, okay. How like profitable is like this? Like how many times does it actually work? One minute is noisy, yeah. It's more faster, more smaller candles. No. No. Hold up. I'm just gonna see, like... No, that's way too big. That's way too big of a spread. Why does the candles look like more pixelated on ES than NQ? It's an area of interest, a zone of support or resistance. Yeah, but don't you like... Alright, say this is like a fair a value gap right here. We'll say like in here. And if the market like... Market comes up, you long here as support, and if this fails, you long here also as support. And then you do like your normal points or something. Whatever you do on NQ. I do 40-20. I try to do 40-20. Spot the fake FVG. Hold up.
This look like a normal fair value gap to you that we can trade back into to then continue higher from? Probably yes, but in the MMT we said no. This is a breakaway gap, a fair value gap that we don't trade back into. So how did we know this? Correlation. But I'll show you the live process that we had in just a second. First, we need to understand how we can predict a breakaway gap. This here is a context area where we are respecting a discount array in the form of that.
This is a breakaway gap.
We are targeting the first opposing.
I don't want breakaway gap. I want fair value gap. I want to see more fair value.
So the move from one PD rate towards the other PD rate, we will see.
Breakaway. Fair value gap simplified.
Fair value gaps are typically formed.
Oh, this is some AI stuff.
And are easily noticeable on the.
Hold up, this is like.
And welcome. Consequently, these zones become favorable. Hey traders, and
no, I want like.
Episode of Smart.
Fair value gaps explained in 22 minutes.
Fair value gaps are a big reason I've made 7 figures from trading. Before I learned them, I was a broke and struggling trader for nearly a decade, blowing account after account.
And then people buy your course. For
the past 3 years, and have withdrawn over $1 million across 200 plus payouts. And recently, I've had multiple $50,000 days using mainly fair value gaps. In this video, I'm going to show you exactly how they work and why they're one of the most powerful concepts. So,
I'll have this like on the side so I can like pause it and switch.
Fair value gaps. Now let's go through a simple definition of them. Essentially, they are the empty space that's created when a price makes a sudden move.
Yeah.
It leaves an imbalance in price. And why is this so important? Well, when we break down markets and how we find opportunity in the markets to make money, price needs to be out of balance. If the markets are in balance, what you get is just a trading range. And it's not until
I don't buy anything, everything is free. Yeah. But I'm just saying, like, most of these guys, like, say they made $1 million. They made $1 million from people buying their course. I've come to the conclusion that, like, most of these guys are just course sellers. Sure, they make some money on the side of trading, but they're mostly just likely to sell a course to make their money.
So when the market is trading,
But the only thing I've only spent money on trading is Rocket Scooter, but that's actually like good resources, like the boot camp Matt J Chain with Matt does. He actually does do good teachings, and it's super cheap and affordable.
from equilibrium. So just imagine that this is equilibrium. So we have 50% of a specific range.
All right, but you're getting sped up.
And we have discount and premium. Okay, so the only way that the markets provide opportunity for us as traders to make money is when they're out of balance, and that's basically why
Yep.
fair value gaps are so powerful, because it's showing you an imbalance between buyers and sellers.
I want to see a live example. Let's see it.
Out there as far as, how markets operate. Is it run by an algorithm? Is it not? And my question to you is, does that really matter? Does it really matter how the markets operate on the back end? Because even if you did know,
This guy's new. I've never seen this dude before. Jad Cap.
it's still not going to have
My friend uses his stuff.
So,
Okay. So like you have like, so it's like most. So your friends and you just mostly use like fair value gaps. Is that like your one trade? Have you like come to the conclusion where it's actually like a really good like strategy to use? Cause, and also how long did it take like to actually like maybe like learn a lot of it, like where to actually see it happen and stuff? Because maybe this could be like my sign to like maybe try this out. Because I still want to try other stuff, but I just want to know if it's like worth my time, or is this like, because I've seen many people use it and pretty profitable with it, but over time, is it like an actually good indicator to use? Right now the market's coming down a bit. Coming down for that other bounce right here on yellow line. Let's see if we can maybe come down lower into bull and bear. 80 band, so I can make like $1,000. Pass on eval.
all in your hands. Okay, how are you managing that specific position? And when I try to visualize the markets, and this is just how I've been able to, break things down
It's a level.
in
Okay.
a digestible fashion where I can understand it and it makes sense to me, is a fair value gap really just shows me an imbalance between buyers and sellers. All right.
All right.
That's really what we need to make money. So
Imbalance. Yeah, I've seen when I was trying out train mostly, I was like watching like I came across TGR and he's doing the same strategy with imbalance in the market, and you just gotta like find that and then use it basically.
fair value gaps. What is a fair value gap? A fair value gap is a 3-candle pattern, right? Where you have 1 candle, 2 candles, and 3 candles. But as you guys can see, this third candle does not fill in the body of this candle. Okay, so
Okay.
as part of that simple definition, right, it makes a sudden move, leaving an imbalance. So this is creating what? A buy-side imbalance. And the way that I view these is that buyers are in control of these markets. So that's
Yeah.
what I know. I don't really care if there's an algorithm driving or not. Pay attention to these patterns enough and watch them pan out, and they will help your trade. They will aid in your trading. They will help you determine, which direction is order flow really going. Is it going higher or is it going
Okay.
lower? And when these levels get inverted, right, now we have possible opportunities to go the other direction, right? Because now all of a sudden this buy-side imbalance is being violated to the downside. That's really.
Might need to slow this guy down because I'm trying to process this.
Imbalance towards. Are there more buyers or are there more?
I use AMD session in my trading. Okay, so you use fair value gap in stocks too. You probably use in anything basically. I feel like with like high volume or something, because you need like big candles. I feel like, or just candles that just don't fill in. Asia, London, New York session. Okay, yeah, you can probably use this like anything basically.
Balanced, right? Think about this.
All right. Yeah, okay. So this is support here. This is support. This is not, this is indicator support, and 3 candles comes in, and resistance here. Okay.
All it's really doing is offering price at these levels where we created an imbalance. So I've read numerous amounts of books, and I've read a bunch of articles on this, and from what I've gathered at least, right, this is my experience, my knowledge of the markets. These large funds, these large institutions, when they place orders, they're not being able to fill at that same price. Let's say if they have, I don't know, a very massive order. Let's say they want to buy $100 million of something, or maybe even more, maybe $250 million of something. they can't get the same fill price because these markets move without them. So if they get filled on, say, 100 million of it, and the other 150 million needs to get filled, well, what happens is when that order goes through for 100 million, it causes prices to, it causes these prices to jump, and it retraces. Now they're able to fill the second part of the order, right? Okay, this is how I, internalized it. This is basically how
I always thought when I started trading, fair value gaps was like a crypto level or indicator. I'd usually call it like, oh, this is like some sort of strategy, and I think it'd only be for crypto because I only see guys trading forex and using this strategy.
The markets, or try and interpret the context of the markets, right? Because there's elephants in the room that are trying to buy up a specific asset, and they're not going to be able to get filled at the correct prices. So let's say that this is, I don't know, $1. So this price right here is $1, okay? So they get filled on their dollar, but now all of a sudden it jumps to here. So instead of it being $1, now it's $1.25. But they still want to get the rest of their order filled at $1. Well, when it returns to $1, now they can fill the other 100 million or the other 150 million, okay? And vice versa, right? If they're trying to sell an asset or offload an asset, you have this sell side imbalance. As the price rebalances that level, they're allowed to sell more of it at the price that they want to sell it at, okay? This is our typical reaction that we're expecting from a fair value gap fill.
Okay. All right. So this looks pretty simple to learn, I feel like. If you like just keep, I feel like to learn this easily, you just like look back at markets and you just go through them slowly and be like, oh, okay, here's one. Oh, here's one. So you can get like familiar in what you need to see. Because I don't think every day you'll have one. Maybe it will, but like, because I'm like not trying to like match, I don't know.
Now, it's not going to be picture perfect like this every single time. Like, you're not going to get this old high, and then you're not going to get this low that pretty much lines up with that. Sometimes it's...
It might sink down.
Other times it's not so perfect. And that's just part of markets. There's a little bit of randomness to this. Okay, so now that we understand what a fair value gap is, let me walk you through 3 essential tips to actually trading them profitably. But first, fair value gaps are just one of the many trading setups in my arsenal. And while they're great on their own, when I can combine it with 2 to 3 other concepts, it really takes my trading to a whole nother level. So I can learn all of the trade setups I use in depth with examples,
order blocks,
stop loss placements,
liquidity raids. Yo, this looks. Yo, what?
etc.
Breaker blocks.
Make sure you download my ultimate guide to trading. Trading execution.
Hold up. Hold up. Give me this. Let's see. Let's analyze. Okay, never mind. I have to give my full name. I feel like I should give a scam one. I should give like Bob Burger or something. Bob Burger. I'll use my email. I do not. No way. I need a phone number. Oh my word! I need a phone number. What do you need my phone number for? I just want to see ya. Let's see. Oh, this guy doesn't sell a course. Yo. I'm looking at his like stuff. He doesn't sell a course.
Mastering ICT concepts made me $4.5 million in just over 3 years.
ICT concepts. I feel like maybe I should switch to ICT, bro. Maybe I should. Because Yo, does this do not trade? Does Blood not trade live? Because I'm looking at his lives.
Resistance.
Oh, here he is.
So when this started rolling over, now I'm starting to find premium levels that I'm trying to get short at. So
This looks like some advanced crap, bro. This looks advanced. I know this is a Fibonacci, but oh shoot, it's going down for another shot. FEG rejected. Okay. So yeah, but can't you like now if it rejected, you can like short off it now if it rejected? Because now it looks like a retest for a short, kind of, if it rejects. Though I know you're in a long, that probably would not work actually. Alright, we're coming down for another MHP test. I'm gonna just get ready in case it might. I don't know. I'm just gonna quickly stop and just quickly see what's going on. Yo, Rocket, how long did it take you to like kind of, I don't know what level you're at for the fair value gap. When do you like start understanding it? Like how many months or years did it take you like fully get it and actually start making profits off it? All right, never mind. This looks like it's might be resistance here. Bull zone, bear zone, DD band, 2, 2, 2, 2. Risking 200. Risking 200 to make like 1,000 supposedly. Buy. Right up to that real resistance. I'll be right back. I go to the bathroom. You learned about different stuff over the years? Okay. Alright. But I feel like I'd take like if you like grinded. I know it takes a very long time for people to actually become profitable, but like 10 to 15 years of experience, and like the first 5 years was like losing, and then it started working. So it must take like a very long time to learn it. But I feel like it also it's like a good idea because like adds more tools to like your tool belt, I guess, when it comes into trading. But you don't want to have like when you're trading like 10 strategies at the same time. I feel like 1 to 3 is good. Maybe even a bit more, like 1 to 5 would be good. All right, so it looks like man, you just gotta take the MHP trade. I should probably take that, though I really don't want to because I want to scale it down here. All right, let's hold up. Let me wait. Okay, let's get that back up because I don't think it will.
And I'll leave that link in the description. Okay, so essential tips. Tip number 1: when bullish, fair value gaps presented in discount are much higher probability, and vice versa. So let's go through a couple examples of what
Hold up.
I mean. When we're looking for fair value gaps, this is when where you have to implement another concept, and it's basic trading ranges. So when we're trying to determine trading ranges,
That looks like
what
a
we're trying to do
that looks like a big fair value gap.
find a specific range that has a swing low and swing high, and use a Fibonacci tool. Okay, so when we're drawing that out, right? As I mentioned, we need markets to be out of balance, and when they're in balance, we're not really getting the opportunity that we want. So when we're hunting fair value gaps when we're bullish, the fair value gap that resides in discount is much more powerful than the ones that reside in premium. So as you guys can see here in this example, we had a much larger fair value gap that's resting in discount based on this specific swing. So we have the swing low, swing high. These bullish fair value gaps in here are low probability. Okay, so if we have an overall bullish bias on a specific market, the fair value gaps that rest in discount are much more important. And yeah, you could probably say, oh, well, there's a swing low here and there's a swing high here, so isn't this technically resting in a discount? Yeah, but this is not really an obvious swing point. Okay, so when I zoom out of this market, okay, what I'm looking for is, visible swing points. This here is basically just a straight line higher. Okay, this is not really a pullback. This is not a pullback that's visible. Okay, so when I'm looking for swing points, I need something visible that, if I turn my candlestick chart to a line chart, it needs to show me market structure. And if I turn this candlestick chart to a line chart, you probably wouldn't get the same detail. It'd be like this. It would look like this, and then like this. Okay, so this is not a real swing point to me, guys. When you're looking for impulse legs and swing points, it's got to be very, very obvious. So I'm looking at the most obvious swing point, this swing low and swing high. Notice how we violate these fair value gaps, and this is where traders think that fair value gaps don't work, but they're getting the context wrong. These fair value gaps are resting at such a premium that they fail because it's going to target this fair value gap. Then when prices are rebalanced, right, and it's more out of balance for sellers, right, this market down here is in a discount now. So once it's in a discount, it's offering you an opportunity to make money because this market is now out of balance based on this specific swing. Okay, it's out of balance and it's sold, quote unquote. Now, maybe the ICT fanatics are going to come after me, but it's basically just how I'm processing things. So this really was just one example, but you guys can see here that there's another example here. Okay. Now, I don't know if I don't see any bullish fair value gaps in here, but if you saw one on the lower time frame, you would just completely ignore it because this is the fair value gap that's resting in a discount.
That looks like a fair value gap actually. So you buy fair value gap here, here, and you would buy here, which did work in the long run.
Right, that's the whole point of.
This looks like I think this is NQ.
Using this, we have a buy side imbalance. It needs to get rebalanced, and that price needs to be offered again, right, based on that range. It needs to be in a discount. Another example, we have a buy side, a fair value gap here, right? That fails, and then it goes to fill in what? It goes to discount here. Buy side balance is resting in a discount. Now, there's definitely risk in it possibly trading lower because there's another fair value gap all the way down here. And that's part of trading that we're just not going to understand. There's multiple fair value gaps that appear, all right?
Yeah, can she with the fair value gaps just scale it? Buy, the fails, buy, fails, buy, and buy, and it's gonna hold. And you're like spreading out. Like I know it'd probably be like a pretty big loss, but like it'd also be a pretty big win.
Other concept that you were seeing that appear, and it's just part of trading. Part of trading is finding a high probability trade. That doesn't mean a trade that's going to work out 100%. Sometimes the best setups fail. Okay.
Yep. Facts.
If you're trying to trade from a short-term perspective, you can use these failed fair value gaps as inversion levels to just get a short, quick counter trend trade to
scalp
an imbalance that you're seeing. Okay. So you guys can see it came down, hit that 50% of this range, and then shot off again.
Well, that's because it opened here. I think that looks like an opening.
Okay, so this fair value gap is resting in discount. This one is not. Now, when it comes to premium, it's the same thing. We have fair value gaps that are in discount, right? So we have 3-candle pattern. There's a gap there.
Yeah.
This is really the high probability fair value.
Okay, so I see how it is. Okay, you put up Fibonacci tool, the highs and lows. You find your fair value gap, and then you use the Fibonacci's to say your stop loss and take profit. I feel like that's how I would do it.
This one, not so much, right? Because it's resting.
Have you learned structure yet? Like what? Like this structure? Like figuring out this?
On this current swing high, swing low, a very visible swing. If I zoomed all the way out, you guys could easily see that swing point. Okay, it's very visible. I'm not sure if I reviewed this same example here, but you guys can see here we have another bearish fair value gap.
Like higher, higher, and lower, lower. Yeah, I know what that is. It's like, yeah, I know that. That's. There's like also like trends and stuff. Yeah, you can see markets in a downtrend. You see higher highs, lower lows, higher highs, lower lows. Smash that first. So like you're saying, like you need to see market structure so then you can actually like see where these value gaps are. Is that what you're saying? Like look like learn more about what the structure of the market looks like um just like analyze it helps. Yeah. Okay.
It out. But let's say if there was a fair value gap that appeared lower down here, just for example, let's say if a bearish fair value gap appeared down here, that's not the high probability one. The high probability one is going to rest higher up in that range. Here, rest higher up in that range. Here, same thing.
Structure first, and then fair value gap, and other stuff is between the lines. Okay. Okay. This looks. Oh, wait, never mind. This doesn't look confusing. This is fair value gap right here. This wick and this wick. So you would take a. Market comes up, you would short this. And also you have this fair value gap, which you would short also. So you'd short here, and if you wanted to scale it, you could short here.
And this is why it's so
this looks very interesting. I'm actually very interested right now.
Maybe the markets are run by an algorithm, or maybe they're not. Maybe it's all mathematical.
Markets are random. You can't. Nobody in the world. Nobody can guess the markets 100%. Sure, you can get like, oh, I think it's gonna go up, and it does go up, but like, you will not get yet every time. Markets are random. Also, algorithm.
This is why it's so interesting, and maybe the markets are run by an algorithm, or maybe they're not.
I don't think they're run by an algorithm. I think they're just like run by other stuff, but it's just not like anybody can guess it. It is random. It's 100% random. But strategies are just like stuff like this is just to help you have a higher probability of guessing if the market's gonna go down or up. That's what like the strategies and lines and ICT and all this stuff is used for. It's just to help you have a higher percentage chance to get it right.
These markets really are engineered. So when you're finding the proper swing points, you will find that fair value gaps appear at these premium and discount levels. Okay?
Yeah.
I don't know. That's not for me to answer. I just know when it provides these opportunities, I'm going to short the market. All right? Okay, essential tip number 2. Size matters. The larger the fair value gap shows larger imbalances in price. And I usually avoid...
Oh, okay. So you don't like... Okay, so what this means is like you don't always look for every single every 3 candles to make sure it's a fair value gap. You always look for the bigger ones. That's why I said 5 and 15 minute. Okay. Yeah, because 15 minutes are like huge candles. Like most of the time. I know there's like not much. Like I've been here for like since 9:30, and there's only been 1, 2, 3, 4, 5, 6, 7. So I feel like most ICT traders make trades around like 2 o'clock or something because I feel like there's enough candles to see what's going on. Because look, you can see there's actually not enough right now to actually tell. There's not 3, maybe the 5 minute. Maybe something here actually. Hold up. Wait, that doesn't work. No, it's supposed to be like this, but that's not possible. This isn't. This is not one. Yo, wait, is it actually? I feel like you need bigger moves. Something like this. Something like this could actually be something. Mark this. And you mark this. Wait, this is actually one. This is actually one. And then you wait. Oh, you would have lost, actually, on this one. Because you would have shorted this. You would have shorted here. You would have shorted here. Around here. You would have lost. You are not even going to want to hold that for 537. You're not even going to want to hold that for that many points. Okay. I think I'm kind of getting it. Kind of getting it. Here it is.
Just like I mentioned with the swing points, it's got to be obvious to me. So a larger fair value gap depicts what? A larger imbalance between buyers and sellers, right? Those are your high probability setups, okay? The tiny ones, and the less obvious ones, there's not that much of an imbalance between buyers and sellers, so obviously it's going to be a lower probability trade. In this example, you guys can see here, we have a very small fair value gap, and we have a large one.
Okay. Is there like a point to do the smaller ones? Because I feel like there's like, look, one whole candle, 2 candles, 3 candles, already like, there's like such a small range. Say you were like to buy here. Yeah, it does work out eventually, but I feel like more because of this bigger range here, because you would have more confirmation. I know market didn't actually come down and hit this, but I feel like this one wouldn't work.
Without realizing that there's a larger fair value gap.
Yeah, okay, so yeah, this is what.
Part of trading fair value gaps properly.
Hold up, you guys probably cannot hear this guy.
A little bit, but your stop loss placement is going to play a vital role in you being able to profit from these trades or not, and how confident you are in trusting these trades. Okay, because if you get stopped out a couple times, that third trade might pay for all the losers, right? But if you're thinking that it's going to go lower and we haven't violated the fair value gap, well, you're not really going to be a happy camper, okay? Because you tried longing twice. The third time, it didn't work out. Or so the first 2 times didn't work out, so you decide to go short the third time, and then all of a sudden, what happens? That's when the real move happens, all right? So be less quick to change your bias based on specific price action. Here, another...
Yeah, this looks like a good trade. I think if I were to trade ICT or fair value gaps, I would look for the bigger ones compared to the little ones, because yeah, you could short here. It is a shorting one. But you're gonna get stopped compared to this bigger one where you can definitely see more and have like bigger room to breathe. And you can easily see, okay, I'm gonna short this because this came down and it hit. And I'm gonna short it.
Good example. This is just a very small fair value gap. This is obvious, okay? The fact that we haven't retested in that level, what happens? This is really where they're trying to reach to. They're trying to reach into this level to rebalance it and then trade lower. This is a large fair value gap that needs to be rebalanced at some point, okay? So it would not make sense to me if the market traded in this fair value.
I should try like make a video and like try and fair value gap for like 30 days.
And then don't, right? Because I see this happen all the time. They're waiting to run these fair value gaps into higher levels, you know, and bigger.
I should do that actually.
And then they're going to take it lower.
Should do that tomorrow.
Another example here. You have a very small fair value gap here, but really this is the better fill price. So when you're thinking about trying to go long in here, well, yes, it did work. Like, where is your stop loss? Okay, like where's your stop loss in here? This fair value gap, you know, if you used the low of this candle, it would have been totally fine. and you're getting better risk reward out of the specific trade. Okay, so instead of buying it up here, right, maybe you're buying it down here. And just keep in mind, guys, that this is not going to be picture perfect. Like I mentioned in the examples, sometimes we get markets that trade at fair value gaps and never, they never go sideways like this, and other times where it hits that fair value gap and it just dumps straight away. All right, it's just part of the game. It's part of the uncertainty with all of this, right?
Does he show a live example? I'd want to see him try a live example.
Now, finally, tip number 3: fair value gaps may require
one, two,
three or more attempts before the trade idea works out. So your trade idea is often not invalidated until you actually start seeing some major reasons for trades to turn around. Okay, so look at this fair value gap, for example. If you were trying to go long on this fair value gap, maybe you went long as soon as it traded down into it here. All right, maybe you took a loss. All right, you put your stop.
All right, 18,550. Maybe 20 points. I do a 40, so I definitely got stopped out here, but I'd go in at 4 again.
There, you took a loss here. Maybe you went long again here, and it got a little bit of a run, but maybe you moved your stop to break even.
Yeah.
Okay, so like, let's say if you entered here, and then it ran up here, and then all of a sudden you move your stop to break even to, well, let me go back.
No.
Let's say you entered here, right?
Yeah.
It rallied a little bit, then you move your stop to break even. Here you're getting stopped.
You're gonna stop.
So now all of a
You're getting
sudden
stopped.
All right.
No, you should do the next resistance right there.
You're gonna be able to have the confidence to take the trade again.
Yes.
And that's where stop loss placement is so important. And it's just part of learning how to trade properly and understanding that.
Facts. Risk management.
Trade a little bit more leeway, right? And where is the proper stop loss placement? And that's all things that for you guys to figure out. Okay, a lot of times I'll err on the side of maybe leaving you at 50% of the fair value gap. So if you left at 50% of the fair value gap, it's only touching down to that level one time.
Yeah, so you have to do like a big range.
Lower the fair value gap because it's a large fair value gap.
I feel like if I was gonna trade fair value gap and I had multiple accounts, I would probably do like the bottom. So here, I'd put my stop here, and let's say that's like 40 points. I'd do a 40-80, so 1 to 2.
Get a very, very large fair value gap like this. You don't want to see a trade.
But yeah, he's also right. You don't want to see like the market, because this is gonna be a huge loss if you actually lose. This is 200 points. No, 600 drops, 200 points. That's 200 points.
Look at this one, for example. This is a very large fair value gap. If I was to short this level, I would not want to see it go all the way to the high. Right? The fact that it ran to the high, that's giving me indication that maybe I'm wrong and the market is going to go the other way. Look what happens. It goes the other way.
Oh, he looks on the 1 hour? What? Wait. Oh, this is why he looks on the 1 hour. Whew. Wow, I feel like that tells a lot. Interesting. All right, let's get rid of this stuff. Actually, never mind. Let's just keep it. Okay.
This is another great example, right? Just because this fair value gap is getting retested so many times does not make the trade invalid. It just makes you impatient. Because let's say if you're abandoning this idea, the fact that we have this very large fair value gap, this is a quite chunky fair value gap. Not only that, but the context behind it is we created a new low. So we're creating a market structure shift here. So we have a market structure shift here. This fair value gap is pretty large. All right. If you shorted the first retracement and put your stop loss, all the way at the high of that fair value gap, now it becomes a test of patience. Do you have the fortitude to stick with the trade idea?
Resistance with liquidity grab zone.
Okay, because this is not a short.
Is there like an indicator? You know how on TradingView you can have like, okay, I think what I might need to do is I'm gonna make a new layout. I need a cleaner layout. Still a cleaner layout. What in the world? I did make a new one. What in the world? Like, clean it. Rename. Fair value gap. Remove all the stuff. Change the candle. Candles. Okay, why is it black and white? Why are my candles black and white, buddy? I think this might have been me, actually.
Are you streaming?
Yeah,
Mute it for a second.
sure. All right, we have a clean chart. Let's get rid of this, and this. Keep NVIDIA. Actually, no. And yeah, all right. Let's change this to the 1 minute. Oh shoot. Okay, so I asked for a new layout and it gave me the same one. Yo. Are you serious right now? Create a new layout. Why is it the same thing? Create a new layout. And if I were to delete all this stuff on here, it'd do the same. Oh well, whatever. Save and close. Why is it copy? Oh well, whatever.
Period of time. We're talking about the 23rd all the way till the 29th. This is 6 days later, and then it finally starts moving. Okay, this is on one.
Yikes. Yikes. 6 days? I feel like, yeah, if you're gonna use like the hourly, you're gonna have to.
Time frame, by the way. So if you're seeing something on the 15-minute, you know, it might be a couple hours. This might be a day later. You know, are you gonna abandon your trade idea because it keeps retesting your patience?
No.
Right? You have the patience and fortitude to stick with this trade idea long enough to see this run.
Yes.
I guarantee you,
Because eventually.
time it right and scale into trades, this run here is gonna more than make up for your 1, 2, 3 losses. Okay, that's proper risk management to me. When I take, you know, 1 to 2, 3 small losses on a trade idea, that third or fourth position, if I can scale in multiple entries as it starts running in my favor, now all of a sudden it's not just a 1 to 3 risk reward anymore. You can turn those trades into home runs, guys. And this is the power of fair value gaps. When you can stick with a trade idea that makes sense, that has context behind it, you have to be able to trust these setups. And that only comes with experience. I'm just kind of walking you guys through some of the examples that I see. But these examples occur all the time. Right? Same thing here. We have fair value gaps being retested, retested, retested. But, you know, do you have the fortitude to be able to catch the one that really matters? All right. Yes, these ones pay off short term. So, like, yes, you can go long here and then maybe exit at the highs.
Scalp it.
Where's the home run trade? The home run trade is really here. Because if you could scale into this trade and then you get this massive run like this, and then you're exiting at the highs, right? Again, this trade makes up for all of this sideways price action. So again, recapping these guys, you know, making sure that you have fair value gaps that are presented in discount versus premium. The larger the fair value gap, the bigger imbalance there is, and I usually avoid the small ones. And fair value gaps may require 1 to 3 or more attempts before the trade idea works out. So pair this concept with context, right? Do I have a draw on liquidity? You know, is the market in a trending environment? Are there reasons for the market to trade in the same direction that the fair value gap is being presented? This basic concept is powerful on its own, but when you combine it with the right mindset and market context, you're on your way to becoming a consistently profitable trader. If you want to...
That was a good video. I'm liking this. Alright. Cool. Cool. I think what I'm gonna do here, guys, is I think I'm gonna go now. I gotta do like school. I got an exam. I am homeschooled, but like I gotta like skedaddle, you know. I've been here for maybe 3 hours, so maybe longer. But yeah, thanks Rocket, Ray. Yo, because of that, I'm actually gonna try ICT. And like I'm not gonna take it like as like a little side thing to do. I feel like I actually want to take this seriously. But yeah, all right. Thanks you guys for watching. I'll see you, Rocket Ray. I just gotta find shoot, I gotta quickly this might take a while, hold up. I'll definitely be streaming tomorrow though. I'll make like a thumbnail and everything of trying ICT. ICT. Where is it? Live. Schedule. Oh wait, what? Shoot, how do I manage? Yeah, manage. Here we go. All right, this is the vertical. I think no, it's not. All right, I will be studying. All right, I will be studying. All right, I will come in tomorrow with like the ICT mindset. All right, I'll try my best to like spot. But yeah, all right. See you guys.